So perfect. So we're going to start now. So good evening, everyone. And I would like to say thank you to all who have joined our session so far. And thank you to all the other people who are going to listen to this particular recording afterwards. So today we're going to discuss about the topic which we call about deep dive into the Victorian market. Just a brief, this webinar is given by Dinesh Goyal and Manish Bansal, who both are buyer's agent and directors of Prop Expert. Before I start further, just want to say about some housekeeping rules. This webinar will be recorded. We will be able to share a link with everyone after the webinar is complete. You guys are more than welcome to either revisit this content or if you want to share it with your colleagues, family, please feel free. We will invite the Q&A at the end of the session. There is a particular chat box. You can use that. You can type in. And after the presentation is over, we will go to each question one by one to answer it. In case if we run out of the time, you guys are more than welcome to reach us out or by email or the phone number, and we will be able to answer your questions. Right. So, Dinesh, can you move the next slide, please?
Yeah.
Yeah, thank you. So in today's webinar, we are going to cover a few things. One is like about us, which means that who's Dinesh, who's Manish, about Prop Expert, what is a Prop Expert buyer agency does. The next topic, which is a very hard, is that a good time to buy in Victoria. And then what we will see is we will deep dive into some Victorian markets. The markets are in metro areas of Melbourne and some markets which are for regional. Later, what we see is there are some projects which are in pipeline in Melbourne. And lastly, what we cover is that how we can help you out. Can I make a request to the people who are not talking? Please, can you go on the mute?
Manish, maybe there is an option to mute all. I think you can use that option too. See if that can help us.
Yeah, I can use. Cool. Thank you. Just to continue, after that, we will take the FAQs. Dinesh, can you move to the next slide, please? Let's do a small introduction. The first introduction I will do it by myself. So I'm Manish Bansal, one of the director of Experts, also a buyer agent. Small thing, I migrated to Melbourne in 2004, and I have been in Melbourne since that time. So you can imagine that being in here for the last 20 years, I have been lived in many suburbs, so know in and out about Melbourne. During my Melbourne time, when I came over here, came as a student, so did my 2 masters. Once I finished my masters, I went into the corporate world, which gave me a lot of experience in the corporate industry. In terms of my real estate industry and real estate journey, I myself is a student investor. I started my journey in 2009. I bought a block, built it up, used the benefit of the first term grant, which was 32,000. But later on, I went ahead, buy a couple of more blocks, built it up, buy established property, and later on, I moved into the commercial, industrial development, and like many other projects which I'm doing for myself. Lastly, I joined Prop Expert, where I can help the people to guide them into the right strategies, right? And this is my role in Prop Expert. Along with that, I'm running a PFA community platform where I've answered more than 100,000 queries to any questions where the people have asking about the property. That's a small intro about myself. I'll pass to Dinesh to.
Yeah, so here, engineer by trade. Again, I'm from Melbourne as well. Came here in 2015, master's in electrical. Got a job in electrical straight away, but I have that bug of property investing, jumping into property. So I've done a lot of courses, how to buy, where to buy properties. So I built my own portfolio, bought few properties for myself, and then started this buyer agency. It went so good. So I started part-time. Within a year, I was able to quit my job. My wife joined me, and now we have been almost 3 years. So we bought around 150 plus properties all over Australia. We established the team processes. So the journey is going pretty good. And now me and Manish has come together to increase our reach, to go take it to the next level, right? So that was a bit of introduction about myself. Manish.
Thanks, Dinesh. I can go from this one. A small intro about Prop Experts, right? Prop Expert, which is formerly known as Property for Financial Freedom, that was founded by Dinesh almost 2.5 years ago. Since the establishment of Property for Financial Freedom, We have purchased multiple properties for our client. That is not only in metro, it's also in regional, it's across all over Australia. So wherever we have done a purchase, it's all mostly been backed by the data, which not only help the clients, but also to have a good equity in their portfolio. In the next few years, as a prop expert, we have a vision to become a leading buyer agency in Australia. And we are moving towards that, right? So also, we strongly believe that by working together, we can achieve our vision and can help many people to achieve financial freedom through real estate investments. So this is a small intro about PropExpert. Now we have done with the boring part. So let's move to the exciting part with the burning question, which is next one. Is this a good time to buy in Victoria? Right? Dinesh, can
Yes.
you move to the next slide, please?
Yeah. See,
Right.
just a disclaimer before I jump into all in that in detail, because that none of this is financial text, any kind of advice. Please consult to the right professionals before taking any action. Right. So it's a humble request to go to the professionals, discuss before taking any decision. Jumping into that, is that a good time to buy in Victoria? So, in my opinion, the short answer I see it yes, and I can give you a few reasons behind that. Right, very first reason is very first reason. Manish, can you put it on mute? Yeah, awesome. So very first reason is it's a warm market. What does that mean? Is generally whenever the property market grows, it has their cycles. There is a cold market, warm market, hot market. So we are buying heaps of properties in regional Queensland that is literally growing by $10,000 a month at this stage. So that is extremely hot market. Whereas Melbourne is something like which hasn't grown in last 3-4 years, but how the other cities has grown, it has a lot of potential to the growth because the price point is sitting like a rock bottom as per my opinion, right? So I'll just jump on giving some data analysis behind that. So if I go on DSR, see, DSR is one tool we use for data analysis. And now let me go to one area which is called Port Kent, one suburb where I bought a property in November 2021. And when I started the business, we put a lot of clients into around that Rockingham Council. So this council, like these properties, has grown massive. So I bought around 380 property. That property in 3 years has grown literally around 300K. The suburb is around 700K. So I've recently get the equity out by the property in Mackay, which is regional Queensland. But this has now Perth, is it a right time to enter? We bought around 80-90 properties in Perth, but we feel there is thing called market cycle timing. What is market cycle timing is, are you entering in a market at the right time, right? So market cycle timing is the score given by DSR tool itself. So it judges that if the market has grown too much, then you are entering late in the market. So late in the market. So that's why what we feel is, so anything above 30 considered to be a good number as market cycle timing. Entering in Perth, when we were buying like 400K property, 450 per week rent, it was making all that sense. But now the price is sitting at 650, 700K. Renters have stagnant now. So they're giving around 5% rental yield and it has already grown market. Then we think, is it a right time buy? I feel you have missed that boat, right? So market cycle timing for Perth, most of the suburbs you will see on the red side. Same thing goes with uh, Adelaide and Brisbane city as well, Brisbane metro areas as well, right? One suburb which I really like, I've analyzed this multiple times, is the Paraloy. Same story, has grown from 400K to somewhere around 700K. If you see, market cycle timing is very, very poor, right? That can be same story with, let's put Red Bank Plains, that's in a Brisbane or Christmas, any suburb. So these suburbs has grown quite significant. 400K suburb becomes 650, and the market cycle timing is poor, right? When you see Melbourne market cycle timing now, for example, one of my favorite suburbs, there was a question on Craigieburn. Let's go Craigieburn here, Craigieburn, Victoria. So prices hasn't grown in last 3 years. They're stagnant or even going less. Like 3 years, And that there are some reasons behind that. There is bad government policies going, a lot of debt on the government. I'll go on the cons, but at this stage, when other markets like Adelaide, Perth, Brisbane has grown 70-80% in last 3 years, being Melbourne hasn't grown anything in last 3 years, it makes a point to discuss, is it the right time to buy Melbourne? And I feel when other markets have grown, you have to go in a warm market, and Melbourne can be in a great position to invest, right? So that's that. And if you see the market cycle timing on these Melbourne pockets, it's very, very high. So it's like above 30 considered to be a good number. 53, something like most of the suburbs in these northern pockets are showing these high numbers. That says you are very early in a cycle and it has a good potential for the growth, right? So this is one reason, right? Which is warm market. Other thing which feels me for a Melbourne to the growth is cash flow, right? Now, there was a time when Perth was giving around 5.86% rental yields. Adelaide was a good time, was giving like 5.5 plus rental yield. Brisbane was similar to that. Now, prices has grown there, rental hasn't grown that much with that much pace. So the rental yields goes down. So now if you buy in Perth, in Melbourne, in Adelaide, or in Brisbane, the cash flow difference is not that much, right? So there is not massive difference now. Then that becomes another reason that is it really worth putting your money in Perth? Why not put Melbourne having a big economy when you are getting almost similar cash flow? So I'll just jump on a cash flow and give you a bit of comparison why I think comparison on typical purchases on all that, right? So first, let's jump into this is a number we just had a purchase in around at 660 mark in Melbourne. So this is kind of a real number. So if we buy a property for 660K in Melbourne, so if you go 20% deposit plus all expenses, you're looking around 170K as a deposit, right? Good thing with the Melbourne is comparing to other cities that the property management fees is cheap. Your insurances are cheap, the council rates are cheap, but the negative is it has a land tax. So if you buy a 660 property in here with 20% deposit and considering 6.5% interest rate, 5% property management, your tax bracket, I'm putting all the insurance rates, property management, and also I'm considering $1,500 as a land tax in here, right? So in Australia, in Victoria, if the land value, it's not a property value, it's a land value. If the land value is less than 300K, that's unapproved. Actual land value and unapproved land value by councils can be different. And so it's unapproved land value of 300 or less, you're going to pay around $975, right? If you're above 300K mark, you're talking about $1,300 or around. But again, if you buy under a trust structure, there is kind of a penalty. So to be safe side, I put $1,500 as the land tax as well. If you see these numbers, this property is going to be roughly around $1,200 out of your pocket a month, in considering interest only payments, right? And after tax, if you're 37% bracket, it's just like a $500 to $600 a month, right? It can drastically improve, and that can be a trigger for a Melbourne to start. If there is a cash cuts happened for 1% of 1% cash interest rate drops, it drastically improves the cash flow. Drastically improves the cash flow. On those who want to buy a property with their equity, because some maybe you are sitting in Perth or Brisbane or Sydney have massive equity, and you want to utilize the equity. So just to give you a prospect how it looks like, if you go 88% LVR, sorry, let's go 105 LVR first. So you're covering most of it through your equity. So you're roughly looking around spending around $2,000 out of pocket and around $1,200 after tax, right? Now, with 10% deposit, I'll just give you a glimpse of that as well, that it looks around this with 10% plus LMI, that is around $1,500 negative and $700-ish after tax. Now, here is a point to compare this with Perth market. 660K purchase. If I go 650 rent, just remember it's, let's go 80 again, just to make it easy. 660 purchase. Now, what's the scenario in Perth that you are getting around 650 rent out of 660 purchase, right? So you're getting around 5%, right? But the other good thing with the Perth is that the stamp duties are a bit cheaper, so you may need $10,000 less deposit, right? But insurances are roughly sitting around $1,600, $2,000 insurance considered sitting around here. You are not paying a land tax here. One difference is you're paying around 8% property management fees, right? So if you see that, so there is not like this gap is coming closer. The after tax before was around $6,000, $7,000. Here is $5,000 after a year. So the difference, and if you see Adelaide and Brisbane, the cash flow now is not that different, right? That's a key point here, and one reason why Melbourne can be a good point to have your diversified portfolio, have a property here, right? Now, going back to that, that's a cash flow thing. Now, diverse economy. So, like Brisbane, Perth had a history of going up and down very significantly. Like in 2014, there was a mining bust and prices has grown because the economies are not very diverse. They're heavily, like, for example, Perth is heavily depending on mining. It's getting improved day by day, but still that's the case, right? Whereas Melbourne economies are very diverse. They have a lot of other, the IT sector is here, we have huge services here. So the Melbourne market to go down, it's not very easy. They can't go very drastically down, and it goes same for growth as well. It can't be like, growing 20-30%, 20% how Perth has done. I don't think it will repeat once again in any capital city. I won't see 20% growth in Melbourne too, right? But it is very diverse comparing to Perth. Other reason why Melbourne can be a king is the population growth, right? So I was looking into some stats in there. So Sydney is sitting around 5.4 million population, and whereas Melbourne is sitting around 5.2 million. So it's a very close to Sydney population, right? It's where Sydney prices are sitting $1 million over. Melbourne is having a huge migration. Overseas migration is very close to Sydney as well. So it can be a largest city by population. Maybe it's, if not so far, it can be very soon largest city by the population. So it's an education hub. It attracts a lot of students, and most of the students have the preference either Melbourne or Sydney. So Melbourne is always having an edge over there, right? So that's another reason. Now, going into the cons of the Victorian market, one, poor economy. So what happened is during the COVID, they have distributed a lot of money, and now Victoria is in a huge debt. What's happening is they are canceling or delaying multiple projects. I've been while I was a signaling engineer in railway, I was working on Melbourne Airport Rail project, and a lot of big projects are getting cancelled. So Victoria, in that sense, in not a great position to support their projects and plans, right? That's one drawback in Victoria. Other is to cover that, to improve the economy, cover all that what they have done in the COVID, they are penalizing the investors. So what the land tax, they reduce the thresholds. Now we are paying all these land taxes, right? And if you buy in a trust structure, even you pay more land tax in there. So that's another con buying in there. Other thing, especially for regional hubs, right? Regional hubs, one key difference when we are buying in regional Queensland, one key difference in Victoria is rental yields are not that great, right? Whereas we are buying 5.5% plus rentals in regional Queensland towns like Mackay. We covered that in last, go and watch that video, Mackay, Gladstone, Rockhampton. You still getting a 5.5-ish%. Whereas most of the regional Victoria hubs are sitting around 5% rental yield, right? So the cash flow is going to be regional hubs, little better in other states rather than Victoria. So these are pros and cons on a high level. Now going to the next here. Now, what I'm going to cover is northern parts first. So when we're talking northern part, I'll just go to the Google Maps rather than. So we split Melbourne into different parts. Some northern pockets, western pockets. Then you have northern western like Melton and all. Eastern pockets have Lilydale, Murulbach, all that. Southeastern pockets you have Cranbourne, Pakenham, all these pockets. So we're gonna discuss briefly on all these pockets, right? So first, jumping on a northern side, right? So where I'm living in Kalkalo. Reason I bought in Kalkalo was there was a home builder grant at that time, which is $25,000 if you build a brand new house. So that's why I built the house in here. But for investors, we are not recommending this Kalkalo Mikilam as yet because there's a huge land supply in there. It's a lot of land supply, a lot of states coming in. So whenever there's a huge supply, there's always a risk of less capital growth. So we are not suggesting anything that far. Now, coming that next, Cranbourne. Cranbourne is one of my favorite pockets. There are some reasons behind that. One is data very, very strong. We looked into data already. So the vacancy rates are literally sitting less than 1%. Your percentage stock on market is low. Your market cycle timing is great. So that puts Melbourne on a very, very good shape. Other thing is there is a big, huge Amazon park getting constructed here. So there's huge buildings coming, and there is 2,000 jobs during the construction and the 2,000 jobs once it's completed. So they have big distribution center coming. So there can be a lot of jobs in the area. Craigieburn is around maybe 40-45 kilometers from city. It's a last metro station. It has all the shopping center, bit small hospital in there. So it has all the services which a family may require, right? So and other thing is rentals are not too bad as well. We're buying some mid 600K properties for 422. They're renting around 600 per week. So that makes a bit more lucrative to us too, right? So I'll go through one recent purchase in here. So this is a purchase we have done in Craigieburn. Again, very decent house, off market purchase. It didn't come on a market, just a 4-year-old house. Right, so we bought off market at 665, right? So a 665 purchase, it's going to rent around 600 per week straight away, right? So these kind of purchases can't go wrong. So if you say land value of 400-meter land in Craigieburn, you would pay around 4 to 450K. So you're not paying huge for the building, you're paying more for the land. So we have done multiple purchases around Craigieburn, as we said. In last 3 years of the business, we haven't done many purchases, but in last 2 months, I think overall in Victoria, we had done 10 plus purchases in the last 2 months, right? So that's how it is coming. Now, Craigieburn, one great market. I've shown you a kind of a example in there as well. Next market, Roxburgh Park can be good as well. It's hard to find 650K properties in there, but Roxburgh Park can be a good option too, right? On a data. Apart from that, another favorite pocket, I won't, like, we are not touching wallet as yet because of the land supply around, but wallet for owner occupiers, it can be great purchases because you're very next to the Epping. Epping has hospital, Fosco, shopping centers, everything, right? So wallet in that, and you have access to 2 stations. If you buy in wallet, you can either drive to Craigieburn station to go to the city, or you can also drive to the Epping station to go to the city. But wallet doesn't have its own station. There are some plans to extend the line to wallet, but it may take 10-20 years. So it is very, very long away. But yeah, Epping, I really love Epping just because it's very close. It's just 30-35 kilometers from city. Again, it has everything, you name it, Costco, as I said, like all the amenities are available in Epping, right? So it can be a great market. One example, we recently bought this property for 654K, still unconditional, not settled yet, but this is going to be, rented around $610 per week as well. So decent 422 house, 400 land size, kind of a like 5-6 year old house, right? So these kind of purchases can't go wrong. Now, this is a northern part, and other thing, we haven't made many purchases as yet. We are exploring it. Marinda, Doreen are coming very, very strong on data as well. There's a last station Marinda in between. This is the last metro station here. So one side of the station is Marinda, other side of the station is Doring, right? It has great schools, all the amenities. It has new hospital, shopping center coming in here. Like very leafy green area that people want to live in here. These can be good markets to invest to. Next to it is South Marang, bit expensive but a great market, and Milpa. So these kind of suburbs, outer, like we are all targeting around 6 to 700K range in metro areas for investors. So that's the sweet spot, and that's how. And we are not looking to buy any townhouses at this stage. We are only targeting freestanding house, and at 6 to 700K range, all these suburbs makes all the perfect sense. So these are the northern pockets. And now we will go to the I think western pockets where Manish has lived almost 20 years. He can speak out and explain the western part.
Thanks, Dinesh. Small clarification. I've been in Melbourne for more than 20 years, but in the western suburb, I've been here for past 2009. So
2009. Yeah, also 15 years. Yes.
50 years, right? So let's have a look on the western suburb. So when we look on the western suburb, there are major two council. One is the Wyndham Council, which is like one of the fastest growing council in the western suburb. There's another council, which is a Menton Council, which we'll talk about later. But if we focus morely on the western suburb, western Wyndham Council, right? Let's have a look on first of the suburb, which is called a Point Cook. This is a suburb where I live in. Most of the people, they know about it, but that's suburb where I'm living over there. One of the biggest particular suburb, which has a population around 66,000. Dwelling is around more than 27,000. So you can imagine it's a very huge suburb. Land supply in this suburb is not much because whatever the land has been there, it has already been taken off. No new development is coming up. It has one of the best school, best public school, which is Alameda. That school has a school rating of more than 95. It's been going up from last couple of years. Rating is very good. The houses around the Alameda has always been in demand, mostly by the owner occupied. The prices are going very high. It's going from 800 for a single story, 4-bedroom house. We just did a recent purchase for one of our buyer who is based in Melbourne for an owner occupier. Dinesh, can you just open up one? Right. Thank you. That's one of the house which we bought at 18 Mercury. That's a house which is very close to Alameda School, though it's not fall under the Alameda School zone. But looking on the configuration, it's been well maintained. Everything is good. The pocket was very great, and it's a house which we can achieve in Point Cook. Now, if we look on the Point Cook, and if you go towards the left side, it's another suburb called Werribee. Right now, Werribee is one of the oldest suburb in Wyndham area, right? Which has another two parts. One is the older area, which is close to the station, right? Over here, there are some rough pockets which can be avoided. But then on the bottom of the Werribee, there is another new states coming up. One of the states came up as a river walk. That was a state which has came up from the council itself. It has been the way the land was been released. It was released in a very controlled way, which means that there's always a demand. The houses which has came up, it's on a decent size. They are sitting under the range of around 650 to 700. Some small block, which is of 300, we might be able to get for 600. Dinesh, I lost her. Yep, perfect. Thank you. So that's a place which we can target it, but the range is around 650, 650 plus. On the left side of that particular area is that another one. There are some blocks over there, which is good. But if you go for the left side, there's a lot of supply coming up, right? And that's an area which is in state called Harpley, Cornerstone. That's a little bit far from the station, far from the community centers. Personally, I would try to avoid it just for the investment. Yes, if it's a case for the owner occupier who has been motivated to live into new houses, yeah, they can explore it. But as such, for the investment point of view, the numbers are not stacking on that particular pocket. If it goes a little bit higher, there's another suburb called Wyndham Vale, which was a bigger suburb, but last 7 to 8 or maybe almost 10 years ago, it has been broken down into two. The Miner Lakes on the left side has came up as a new one. Now, the problem with these two suburbs is a lot of land supply. Houses in Wyndham Vale, the houses are a bit low. I would say the houses are a bit old. As per the data, the vacancy rate is very high and the numbers are not stacking up. So Yes, the prices are low, but if someone has to buy it, it has to be kept for a very, very long term. Immediate equity cannot be seen at this point. If you look on the Manor Lakes, we can see this lot of land supply, right? Again, the strategy would be if we have to live in, that's an exception scenario. But in terms of investment, yes, we have to wait. We have to buy for the longer term. If we go towards the right side, Dinesh, there are two more suburbs. Tanit, again, is one of the biggest suburbs after Point Cook. It has grown up a lot. All the new houses are coming up towards the station. There's new development coming up. There is a problem with the supply. The developers who were able to sell the blocks, eventually the blocks were not able to resell it. There was a builder collapse afterwards. People who were holding the land are not able to build it up. So that's an area, because of the land supply, it's somehow it has hit it hard for the people. But the area which has been established in Thane and Tragina can be explored because it's one of the growing area. There's a lot of amenities, Bunnings, stations, everything is over there. It's just over reach, right? So my take over there for Tanit would be if we have to have an owner occupied in a new area that have been be purchased from an emotional point of view. But from an investment point of view, either we have to compromise on the land size and or we have to hold it for the long term, right? Something similar, which happens with the Trugnina, same story as what Starnet is. But if we go scroll up, uh, scroll up a little bit up to Caroline Spring and to the other side, up other side. Yep, Trugnina Dean side, right? So that's a new area. The Caroline Spring is an established suburb, right? It's looking promising. It's looking good. The prices over there is on premium on 750 plus. Uh, There are a couple of more suburbs over there, like Sydenham, Taylor's Hill, Delhi, Kings Park. Among them, my pick is more towards the Deer Park. We can see rate is very, very low, very, very low. There's no more land over there. Houses are good. We have looking into that one. We have to dig up more into this, what we can achieve it. But like as per the data, Deer Park looks very, very promising. If we go to the left side, Dinesh, now there's a lot of land supply over there, which has come up as a new suburb, which is like Deanside, Plumpton, right? Rockbank, Thornhill Park. All these suburbs, because there's a long land supply, right? The risk is a bit higher to hold it. Only there's one pocket which is Aintree, right? That's a particular pocket which is a new estate, and that pocket is good because of a school which is a Beckeshma school. That's one of the private school. People are really going against that school, and because there is a demand which has been created by that school, the houses around that area is really really good. If you're able to achieve it, if you're able to buy it, we should consider this area, right? Uh, uh, can you move to the left side? Again, all empty land. And then what we see is the suburbs comes in as a Melton. Now, Melton itself used to be a bigger council, and after that, the Melton has broken down into different suburbs. Like if you see towards the north, is the Kurumchang, Harkness, Melton West, Brookfield, Melton South, Cobblebank. One of the beauty or one of the good thing about Melton is that there's a new proposed hospital coming up around Cobblebank, just over there. Yep, we just zoom in. Yes, over here, right? So yes, there is a land supply, but because this new hospital is coming up, it's gonna bring a lot of jobs, a lot of another type of people. I Apart from this thing, the Melton, right? If you look on the vacancy rate, look over the price mark, we are able to achieve some property over there in the range of 550. Decent 4 bedroom sitting on a land size around 476, right? We did a recent purchase for one of our client, which is 3 Parkinson Way, which is sitting on 476 square meter. We did a purchase for 541, 500. So yes, there are some pockets in Melbourne, in outer west as well, in the western suburb. Melton is one of the example. Just in Melton, there are one of the pocket which is around the station, which is little bit rough, right? So we have to avoid that one. Apart from that, it's looking good as per the data, and we need to see what is the price range of the client is, right? So some suburbs, some states, they are promising in Melton as well. Where is one of them. That's overall about the western suburb. Back to Dinesh for the next part.
So thank you, Manish, for that. So that's all the western and northern, which are mostly creative to the investors because of proximity to the city. So all these areas are just 45 kilometer radius of city. Now, looking into eastern pockets, those who want to live, there are some great pockets like Glen Waverley, Mount Waverley, Doncaster, Box Hill, but you're talking about around $1 million price tag or over $1 million, right? So it's not my idea is always having a good, at least decent cash flow whenever you're buying a property. So it's not a big burden on your pocket. So the rental yields are not that great in these pockets. So for investors, we are not touching. But if one want to have the owner occupier house in these areas, we can definitely help him there. Right. Apart from that, that's Vauxhall. And one little affordable is can be Lilydale is the last station on the train as well, a metro train as well. Murul Bagh, Lilydale, these are the pocket. But again, the typical value, if you see in there, so they are expensive. So if you see in here, the typical value is sitting around 900K. They hasn't grown much. The other data points like percentage stock on market, vacancy rates, all that are good, but the rental yields are very low. So it won't be good for a cash flow purposes. But yeah, capital growth, because they are premium pockets, you're gonna have good capital growth over the time in these areas, right? So that's that. Now going down, other pockets which are a bit far from the city but good on the data and affordable. You're talking about southeast now. Southeast is most established area in Melbourne, so like a lot of people only prefer living in southeast because the huge industries over there. So Dandenong is full of the big commercial precincts in there. So it's a big market, right? Those who don't travel much to the city, they prefer living southeast in areas like Officer, Pakenham, Cranbourne. Clyde North is coming strong as well. So all these areas are good. We haven't started buying in there as yet because of the proximity to the city. We are getting good opportunity in northern pockets as yet. So slowly we're gonna start moving towards the southeast suburbs as well. But around 600K, anything like in Cranbourne, if I see, I was looking Cranbourne. So it started promising now, hasn't grown. But yeah, so stock on market is low, vacancy rate is low. I know days on market properties is getting sold very quickly. The market cycle timing is good too. So again, southeastern pockets are these are the pocket. One another suburb which is kind of my favorite is Berwick, a really beautiful suburb. It's kind of a hilly area, having a big hospital. But yeah, price point you're talking about 750 to 800K for a decent 422 in Berwick and around, right? So this is southeast. I won't go much in details, keeping in a keeping time in the mind. So that is southeast or eastern pockets. So that is where most of the metro pockets we are looking. We are continuously exploring because we just started buying in Melbourne. We are exploring all these pockets in details. But these are the high level information about Melbourne City, right? We already have passed 40 minutes on the webinar, but I will quickly touch base. We may do another webinar talking very much in details on regional Victoria markets, but we'll touch base on few, like first Geelong, right? The only problem with Geelong, as I said, regional Victoria, Geelong, this is just a 1 hour drive from 1.5 hour drive from Melbourne. Massive regional hub. But the problem is the rental yields and data is not yet ready to start buying there. So we are not touching many regional Victoria pockets as yet. But what started coming good on a data is, say, Geelong, Ballarat again have a high stock on the market. Maybe not a great market to enter. Warrnambool is again, it's improving, but we are not just entering in there yet. Bendigo is where some areas like Eagle Hawk in suburbs, Eagle Hawk, just an example. So they are started looking promising. Rental yields sitting around this four. This is typical rental yields. We always get a little better than that in the market. So 4.68. We always get like a bit better. Say 5% rental yields in Bendigo. Great market, but again, so it's stable lines, but they are coming strong on data. We may start buying there very soon. So Bendigo is one market which is looking strong to us. Horsham is in between. If I see Horsham, Horsham is a small town. When we travel from Melbourne to Adelaide, Horsham is a around 20, I would say 20,000 people population, or 20 to 30,000 population in there. This is a small town in there, having a huge agriculture industry and few other industries along with that. If your ticket price is just 350, 320, 350, Horsham can be one market which can be looked into. So that's one. Shepparton is a regional hub. I really like Shepparton. Uh, there is a rooming house concept, very, very successful in Shepparton, because it has that hospital and all that amenities. But one thing, it's not yet ready on a data. Marupana started looking strong on data, but most of the pocket is affected by flood zone. So we are not buying much in here as well. But Shepparton, we are keeping a close eye. Maybe we will start looking to Shepparton very soon. Not yet, but looks very promising to us, right? Another regional hub we have here, Wodonga. Uh, Next to Wodonga is on a New South Wales borders. Wodonga and Albury is next to each other. So this is Wodonga, next to it is Albury. So this is New South Wales Victoria border, right? I would suggest Wodonga is a great market to invest, but Albury can be considered as well. Because if you invest in Albury, you're investing in New South Wales, you can save the land tax component in there. And some pockets, this Thurungna, Levington, they are coming good on data again. But Wodonga is again, it's not too bad. We are keeping an eye, but haven't started buying there. But this can be a market to buy as well, right? That's that. Now, next is Stralgan. Again, it's a cool market at this stage. A bit of supply on a market. We are not touching, but with Stralgan, Lake Entrance, there is another small town here in named Sale. The Morwell, all these are kind of on a radar, but we are not touching as yet, right? So that is regional Victoria, and as soon as these pockets started coming better on the data, we may have a detailed dive again in regional hubs, and we can discuss all that, right? So that's the regional Victoria market. Now, I just want to discuss on the major projects, what's happening in Melbourne. Will not take much time in here. One major project there's a lot of railway projects happening. One of the biggest one is suburban rail loop. So what they're trying to do is they are trying to connect all the railway lines with the loop, so that you don't have to travel to the city if you want to go to the other railway line. So that's a huge project. It's going to be it's going to be 20-30 years of the project, but it can be it can shape the city very well, right? Next one, it's almost completed, is Westgate Tunnel project. So at the moment there is only one bridge which is connecting to the city to the western suburb. So that is a lot of dependency on that bridge. So what they are coming up with another tunnel, and that tunnel will improve the connectivity to the western suburb, right? It's almost completed, and that can be like from the western to the city. It will be very easy to commute, and it can be it can give a good edge to the western suburbs, right? Northeastern suburb, Northeast Link project. This is all connecting that eastern pockets to the city and towards the city as other parts of the city as well. This is a really good project for the northeastern suburbs. At the moment, there is no major highway connecting those cities, those areas, but this project will improve that on that, right? There's a lot of hospital upgrades projects happening. This was in Cobblebank, which Manish was talking about. So this is few good projects in Victoria to keep an eye, which is shaping the city, right? I've covered that, so this is all I covered already. So I'll ask Manish to continue from here.
Yeah, thanks, Dinesh. There are few things how prop expert can help each of the people, right? One of the thing is like we have purchased more than 150 properties. So we haven't purchased only in Melbourne. Melbourne is something we just started it over there. As so far, we have on experience. Now, Dinesh and myself, we are based in Melbourne. Dinesh is based in most of the northern side. I'm based in the western side. So we are on the ground to do the inspections, right? I myself, being in 20 years, I have lived in many different suburbs. So I have a very good knowledge in terms of the suburbs I have lived in, which are in the inner part, which are in the western suburb. Given we are both are living in Melbourne for such a long time, we have already have a strong relationship with the real estate agents, which help us to get the off-market properties, right? So in summary, as a prop expert, as we are in Melbourne, we are able to help you out. We are able to provide you end-to-end support, which means that we can give the market trends, we can hold your hand from the beginning from the convincing point of view till the end. After the property has been settled, we are more than happy to engage your property manager. So in summary, a prop expert can help you out if you are looking to buy a property in Melbourne, not in Melbourne, across Australia, but since we are based in Melbourne, we can help you more in that, right? Just some tips, because Melbourne is in the news such for a long time that there hasn't been much growth. There are some people who have done some mistakes. I want to share some tips over here. One of the strategy which people have done it was like they buy some blocks in the outer suburb with the intention is that just buy it, build it there and sell it off. Given the market constraints have changed, right? People who have done this strategy, they are a bit struggling it to when the property is been when they are putting the property to the sale, it right. So that's one of the strategy which is not working in Melbourne at this current scenario. There's another strategy what people have done. It's like they bought some untitled block with an intention is that when the block will get settle it, they will nominate it on with some profit. Eventually, that didn't happen, right? Because the market hasn't grown up, and as such, they are the people who are instating with the land itself, or they are the people who are losing some deposit in the land. So when we hear the news, we got too much land supply, the property market is going down. The reality is, what I see is the people who are holding the land, they are the ones who are having a loss, having a bit of loss over there. People who have built up new houses and they are struggling. This is another example, right? Or the people who has bought some blocks which are the smaller in the size with the built up, they are the people who have been struggling. So these are the small tips which I would say if we can avoid it, if we can enter in Melbourne, it won't harm it, right? So that's how we can help you out. Over to you, Dinesh. Yeah.
Thank you, everyone. So this is what we was supposed to discuss today. Now we're gonna open up some question and answers in here. Anything, Manish bro, want to add before we start question answers?
Now we're gonna open the chat group for the questions, right? And we can take it now. What's the time? It's 7:19. We can take it for another 10 minutes. So the way we
Yes.
can do is there is a lot of questions which has came in the meeting chat, in the chat option. Was able to answer many of them, but given the time, I was not able to given all of them. So let's go with now. The very first question, which I can see it now, which came up is, what's your view on Dallas and Campbellfield?
Sorry, what was that?
What's your view on the suburb Dallas and Campbellfield?
See, the last again on data, it's coming strong. If you have a low ticket price saying 550K, you want a bigger land size, and your plan is to subdivide, build blocks, having a development strategy in a future. Dallas can be good one, but it's a low social area to keep in mind. So Dallas, we like in my history, I never bought properties in low social areas. Try not to buy. So, for example, Armadale in Perth, we haven't bought any, but those properties still grow. So Dallas can grow. We are not denying that Dallas cannot grow, but we only buy if the client have a specific requirement that they want to develop. Because council is supportive to develop subdivide those properties. So yeah, so if you have that mindset, yes, Dallas is very close to city, can be a good buy, right? But we need to be very selective and have a specific approach. Campbellfield is almost same. I would suggest a Meadow Heights. Meadow Heights is again next to Dallas, little better than Dallas in socioeconomic. It's again Meadow Heights. Some pockets are good, some pockets are bad. Need to be very careful. But Meadow Heights can be another suburb around that Campbellfield, Dallas.
Cool. The next question came up. What are your factors for choosing the area with high and growing rental demand?
See, whenever the vacancy rate is extremely low, so one is you check. It's easy to check how many properties are available on a rental, divide by number of dwellings in the suburb. So you get the actual vacancy rate of the area. If the vacancy rate is low, right, high demand, and also they need to be discussed with a lot of property managers on the ground, that are they getting a lot of applications for the property. If there is a high demand, properties are getting rented within a week, no, the rental is definitely going to increase, right? So it's all supply and demand thing. Those areas with having very high vacancy rates, having a lot of stocks, you will always have competition between landlords to rent those properties. Then you're gonna you're gonna struggle on that, right? So that's my say, like vacancy rates too below, and check with property managers on the ground.
Cool. Another question, which is about the regional suburbs in Bendigo looking strong and better. Is it a true or
Yes.
wrong?
It's true. If you look about, I think Golden Gully, Eaglehawk, these kind of suburbs. If your price point, you're looking on early to five, like mid to early 500K, Bendigo can be good option, right? So that's what I covered. We haven't started buying in there. We are exploring it as yet. But Bendigo can be good. I was exploring it almost 4 or 5 years ago when I was looking to buy for myself. See, all these market cycles keep changing. It was regional Victoria before, then it comes to the Perth market, sorry, Adelaide after that, and then it was a Perth cycle. It all goes Perth, and then regional Queensland cycle. Regional Queensland is hot market, but Melbourne is coming as a warm market. So these cycles keep changing. So Melbourne can be having this cycle, and all these first I believe the Melbourne CBD will start moving, then along with that regional hubs will start moving as well.
Yeah, that's more about like what happens with the ripple effect.
Yes.
The next question is about the thoughts for Truganina, and I can answer with that, right? Truganina at this stage is sitting in the colder part, right? Truganina itself is a very, very big suburb. The way they did is like there's one portion which we call about a state called Mount Atkinson. Now, the Mount Atkinson state is just in the corner, and though it fit into the Truganina suburb, the Mount Atkinson state and the next state was there was Opalia, not Opalia, there was something another state, Grandview. So all these states were when came into the market, the developer they promised there's going to be a new shopping center coming up, but it's been ages. Then nothing has been came up over there, right? So that's one area of Truganina. But if you go to the another part of Truganina is when it's closer to the Stanage station, which is a state called Westbrook. That's one of the very beautiful state to live in. Now, if your intention is to live in, yes, it can be good option. But if your intention is to buy for investment, then look something which is closer to the school, Doherty School, Truganina P9 School. Though Truganina itself is in the colder area, I mean, say the cool market, it will take a little bit of time to grow. Right? So for unoccupied Westbrook area, fantastic, no issues. Going to the next one, Truganina Pakenham. Pakenham.
Yeah, so Pakenham, as we discussed, it's one of the affordable markets. You can see around 550K older houses as well. 550K, like it on a data, it's strong. It's not bad market to invest. But again, it's the only drawback with the Pakenham is it's very, very far from city. So it's roughly around 1 hour, 20 minutes from a city. So that putting it in a little bad, but not many people travel to the city as well, because there's a lot of dairy farms and business hubs around Pakenham. Dandenong is a big market where people, people go to work. So Pakenham, I would pick this. I want. I think it's a good pick if you see my opinion. So the stock is low, vacancy rates is low. Should be all good buying in Pakenham, in my
And
opinion.
adding to the Pakenham, again Pakenham has two parts. One is the older part. Yep. If we go closer to the station, go to the main road, the things cannot go wrong. But if you go to the newer part, which is expanding to the Nandurgaon, right? Because it's coming with the new state, is the same going to be land supply. Myself, I have invested in Pakenham, but not in residential. I have invested in industrial land. I was sharing a story about the industrial land. My industrial land itself in Pakenham has grown up 3 times in last 3 years, right? So that's a different asset, but yeah, again, there's a potential over there.
Yes.
Let's take another question. Should we consider suburbs like Deanside or Caroline Spring for capital growth? My take for here is that Caroline Spring, yes, it can be considered. It's a little bit pricier, right? But for the capital growth, it has a potential. Deanside, Again, it's a new suburb, lot of land supply. It will take much longer for the capital growth over there.
Yeah. Yeah.
Dinesh is showing the stats for the Kremlin Spring. If you look on the vacancy rate, it's less than 1%, right? Stock on market, Dinesh, you can say more about it.
Yeah, stock market
It
is everything as Manish has explained. Typical value is a bit high, so you're entering on a high price point. Dean side, same. If you say Dean side is again new suburb, you'll see a very huge stock in there. So you're gonna say percentage stock is 10, close to 10%. So it's a big no for my side going to Dean side.
Good. The next question is thoughts on gauging negative gearing.
Thoughts on?
Gauging.
Maybe so see again, is it like are they're trying to abolish the negative gearing? Is that the right question, right?
I think so. Yeah.
Yes. So
I think, yeah.
see again, it's a $10 trillion market, real estate, and there's always a house crisis. The people are literally struggling to get the rental properties in some areas. It's going to be very tricky to take that big decision. We can't comment on that, but this is something I won't see it happening anytime soon. So I would say because elections are coming next year, they don't want to piss off huge investor like there's a lot of investors in Australia. So I won't say it will happen anytime soon.
Next question. How do you know if certain pockets in the suburb are to be avoided? Is it confirmed by data?
There are a few ways. One, you can get a percentage of public housing from data points that okay, this area have more public housing. You should avoid those pockets. Other a good way is your property manager. So because we are in a ground, not even on a ground. Whenever we buy interstate as well, we have very detailed discussions and map out the areas that where we should invest or where shouldn't invest, and they point out some areas where not to put your money in, so we kind of avoid those pockets. So good method is to discuss with property managers, asking the good and bad pockets, right?
Good.
So that's how you can identify that. Right?
Good. Dinesh, there's another question came up, and I think did we cover up that suburb or not? The question is more about Karam Downs.
Oh, Caram Downs we missed. I really like Caram Downs. Again, this is a peninsula side. Caram Downs. It can be a very, it's like again price point 700K. You can still get like high 600, 680, 690 houses in there. Very close to the beach. It has a train station. It has all the amenities. I would say Caram Down can be a good pick. Have all the data aligning for Caram Down. We are exploring Caram Down as well. We haven't started buying it as yet, but Caram Down is one which can be good.
Question came up. I think you covered up on the high part. Suburb about Cranbourne, Clyde North.
See, a lot of people want to live in Clyde North, especially just because it's good schools. It's a big Indian community living in there. Again, Clyde North on data is not too bad, but again, these all are new developments coming in there. There is no train station. You have to go Berwick to get the train, or you have to go to Cranbourne to get the train. So the train station may, I think Clyde extension is happening or already about to finish or something like that. But yeah, price point for investment, it's really like 750K ish. It's far from city and expensive as well. So rather than if you are going to live in that property, can be okay, but stock on market, as I said, like because the new areas, stock on market can be high. I would say Barrick is better comparing to Clyde North or Clyde, but yeah, it's more for owner occupiers, as we said. Like these areas can be good for owner occupiers. For investments, I would say there are better pockets.
Cool. All those new suburb already had their growth from the last 3 to 4 years when land was released first, right? So as a thumb of rule, like in case if we are entering into a new estate and if we are able to buy a block in stage number 1 or 2, that means we are entering early in that particular state, which give us a higher chances for the growth. But if we are entering and buying a land where the almost that estate is going to finish, right, then it means that the entire cream of that particular state has been already been used, right? So yes, if you are entering early in the state, it becomes a higher chances for the capital growth. And
Awesome.
second thing is like we need to buy a good decent size of block, right? If you're buying 200, 230, 180 square meter block, 250 square meter block, things can go wrong. So we need to be very, very
Yes.
careful for that.
Yeah, so land is the key. We always try buying at least 400 plus land sizes. In specific cases, we go 350 land sizes, but sweet spot in would be like 400-meter land size, in my opinion, right? That's it. I think Manish bro, let's take another last question here. We have already passed the time, and
Yep,
then we can
last
ask
one.
everyone to DM us the question,
Sure,
and
the
we can
last
answer.
one. The top three suburb which you choose for 600K to 700K in Victoria at the moment.
I'm a bit bullish on the northern suburbs. So my personal pick, I'll ask Manish for the personal picks as well, but I'll go with maybe Craigieburn, Epping, and I would go with Marinda Dublin. So I would go with that one. Manish, bro, just name three.
I echo you. Northern looks more stronger than the other part. Western, I would not be able to say yes. We need to consider it only in case of exception. We should consider it, right? But if you look in terms of data, the Craigieburn looks very strong. The reason why we did a purchase over there because the data and the market is behaving in Craigieburn. Vacancy rate is very low in Craigieburn, and if I had shared one of the screenshot on the PFA one of the event, which says that from last 12 months how much decline the properties has been seen in. If you look on the northern part, you will see the properties are stable now, which is still a good indication that yes, we are still in the buying zone over there.
Yes, yeah. So, but we are here, literally, we are covering most of the pockets in Melbourne. If you have any questions, just reach out to us. We can definitely help you. It's not only buying properties. Any advices you're looking for, we are happy to help. Right. Our whole agenda is to help everyone, and you can buy yourself as well. There is no harm. But with us, we can be your guide on the ground, and we can hold your hand and taking to you throughout the process. Right. I would say thank you everyone for joining today. It was a great turnaround. Around 200 people joined this webinar, and very thankful from entire Proper Experts team. Anything you want to share, Manish bro?
I would like to say thanks to each and every single person who have joined it, right? There have been many other questions which has been asked. We are not able to take all of them. But if you have any questions, please drop an email. We will take it forward from there, right? I think we haven't covered the entire chat. So apologies to all those to whom we haven't picked up the questions, right? Yep, that's all from me. And yep,
Please send us
that's
DMs. Looking forward to help everyone. We are a team of 9 asset, 6 buyer agents, 3 support. We have all the processes and everything in place. We can definitely help you out. Thank you very much, everyone. Have a wonderful night. Take care.
take care. Bye bye.
We'll wait for a couple.
Yeah.